Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is May 5th, 2025, and we're diving into Ford's first quarter financial results for 2025. Joining us is John, Senior Analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Ford's Q1 results are quite intriguing, especially given the current economic climate and industry challenges.
Revenue and profitability overview. Let's start with the top line. Ford reported a first quarter revenue of $40.7 billion, which is a 5% decrease from the same period last year. Despite this, the company managed to achieve a net income of $471 million. John, can you elaborate on these figures?
Absolutely. The revenue decline is primarily due to a reduction in wholesales, which was expected as Ford undertook planned shutdowns in certain plants for new product launches and inventory rebalancing. However, the company still managed to post a net income of $471 million, thanks to improvements in cost and quality, which positively impacted their performance.
And what about their operating cash flow?
Ford's operating cash flow was strong at $3.7 billion, indicating robust cash generation capabilities despite the revenue dip. This is crucial for maintaining liquidity and funding future investments.
Segment performance. Ford's business segments showed varied performance. Can you break down the segment results for us, John?
Sure, Ford Blue reported an EBIT of $96 million, down from last year due to expected volume declines and adverse exchange rates. The Model E segment, focusing on electric vehicles, reported an EBIT loss of $849 million as it continues to invest in battery facilities and next-gen products. On the other hand, Ford Pro generated $1.3 billion in EBIT, despite a 14% decline in wholesales due to planned downtime and unfavorable fleet pricing.
And Ford Credit.
Ford Credit had a strong quarter, with earnings before taxes of $580 million, significantly up from last year, reflecting its resilience and strategic importance to Ford's overall financial health.
Strategic initiatives and future outlook. Ford has suspended its financial guidance for the full year due to tariff-related uncertainties. What does this mean for their strategic initiatives and future outlook?
Ford is facing a potential $1.5 billion adverse impact on adjusted EBIT for the full year due to tariffs. This uncertainty has led them to suspend guidance. However, Ford Pro is gaining market share in the US and Europe, which is a positive sign. The company is also maintaining a strong balance sheet with $27 billion in cash and $45 billion in liquidity, providing flexibility to navigate these challenges.
How is Ford planning to address these challenges?
Ford is focusing on strengthening its core business, improving quality, and maintaining cost discipline. The Ford Plus plan is central to creating a more efficient and durable company, and they are committed to investing in profitable growth while managing industry dynamics.
Key takeaways. In summary, Ford's Q1 2025 results reflect a company navigating through significant challenges with a focus on strategic growth and operational efficiency. Despite a revenue dip, they maintained profitability and strong cash flow. John, any final thoughts on Ford's investment prospects?
Ford's strong cash position and strategic focus on key segments like Ford Pro and Model E position it well for future growth. However, the tariff-related uncertainties and suspended guidance are risks investors should keep an eye on.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Ford's performance in the comments below.